Hey, good afternoon, everyone. Welcome back to the channel. So in this video, I want to discuss everything FEPI related. The RecShares FEPI Fund, FANG Equity and Innovation Premium Fund. Let's go look at Seeking Alpha and discuss all things FEPI in this video. So here we go. And I believe they just declared their most recent dividend. So we're going to look over all of that. So FEPI, yep, Rex FANG and Innovation Equity Premium Income ETF. This one is actually one of the better dividend income funds. Although since the start of the year, it's down 5.18%. Since inception, it's up 1.43%. But the good news is, even with all of the market swings, we're still up in price return and getting a dividend, which is kind of what we want, right? So with the dividend, we're still up with all the dividends that have been paid, which are pretty good. I want to say it's like a 26% dividend rate. So let's go look here at total return. So total return is actually solid, I would say. Not quite pacing with the S&P, but 15% since inception. And of course, if the FANG stocks start to rally again, this one I think will do even better. And like I said, I believe this one is actually invested in the actual holdings, not any like synthetics or anything like that. So let's we looked at the chart for, let's see, since inception and then year to date. Year to date total return is 3.22%. Let's go look at holdings. So 66% tech, 19% communication, 14% consumer cyclical. Top 10 holdings: Tesla stock, Palo Alto, Alphabet, Apple, Adobe, Salesforce, Broadcom, Intel, Microsoft, Amazon. And then the other 69% is and other stuff. This is just the top 10, but of course we can look at all of them if we want to. But usually the standard breakdown for funds like these, they show the top 10, and then if you want more details, you have to go into the other documentation. As far as, oh, the quants haven't rated this one. Let's look at the dividends. So the dividend payout percentage is actually 13% annualized. It was $1.09. That was the one I reported as $1.19, but it was 10 cents less. So if we take $1.09 and annualize it, that's going to be 13.08 for the whole year, divided by the NAV of 52.43. That is a 25% yield. So I'm not sure why this is saying 13%, trailing 12 months. That's because this is misleading because the fund hasn't been around for a year. An annual payout, it's not estimating the full year. So they're understating it. So they're erring on the side of understating it because they're only counting what it's actually paid. So this one was just paid on the 25th. So that's about where we are every month. The last week of the month, we typically are getting a dividend in this one. So the dividend scorecard. So the Seeking Alpha analysts have this rated as a buy. Do we have an actual scorecard or is it too new? Dividend yield. Growth. Safety. No, probably too new. Let's see what it says for risk. Percent of assets, top 10 holdings. There we go. Asset turnover. For peers, let's see. Oh, it's got YMAG, YMAX, and the JEPQ. The lowest expense ratio is the JEPQ. So assets under management, this one is lapping around the other three. But of course, these two are fairly new. YMAX is probably going to catch it. And these, of course, have a much higher expense ratio. So if you're looking for value, you're going to pick probably FEPI or JEPQ. Let's see what we got here as far as comments. Just one. We got just one commenter this afternoon. Okay, so now that we've looked at Seeking Alpha, let me go look at, let's see. We'll go look at their actual site in a second. But let's see what else. So FEPI and JEPQ, those are pretty solid peers, I would say. Let's see. There's those metrics. All right, let's go look at the actual RecShares site. And of course, next Tuesday, which is 2 days away, we're going to get the Roundhill weekly dividends. I'll have to estimate those. I really need to get back on track as far as uploads. It's kind of been crazy the last couple of weeks. Okay, let me share this screen. Let's see. Let's go to Rec Shares. So we've got two categories. We've got the T-Rex funds, and then we've got FEPI. So FEPI, 15 big tech stocks, one covered call strategy. FEPI combines big tech stock exposure and potential for enhanced income in a covered call ETF. So it's the combined 25.2%. There's the distribution rate. Let me try to hover over this one here. Learn more. Here we go. Yeah, here's the strategy. Dividend history. So we're staying pretty solid as far as the dividends. There was a little bit of a downturn the last month or so, which probably led to a lower dividend for us. This is going to be all the holdings if we wanted to download PDF. I guess we could. So this is, I just pulled up all the holdings here. There's 5 pages of them. I'm not going to go into all of them. Not going to rattle all of them off. We looked at the top 10 at least. Let's see. Here is performance, 1 month, 3 months, year to date, since inception, 20%. It's saying. I'm not sure how they're calculating that, but oh, as of March 31st, it hasn't been updated. So we were really kicking butt at the end of March. Of course, everything was up really solidly at the end of March. We've had kind of a rough past month or so. I've been trying to get these guys on the channel, by the way. They did respond, but we just haven't set anything up yet. But anyway, so yeah, FEPI, like I've been saying, FEPI is, I would say, one of the channel's favorites at the moment. So really solid, like I say, with the dividend payouts, which are still 25%, we're still up in just price return. So really solid. All right, that's about all I had for you all on this one. Like, comment, and subscribe, and join Discord if you haven't already. And Mr. Allen here agrees FEPI is good. Glad we all agree, all one of us that are commenting. All right, you all, take care. See you in the next one. Maybe, just maybe, I'll do a live show. We'll see. So stay tuned. See you in the next one. All right, bye.